investors are you speaking to? That's me.
Awesome. Thank you so much, Jeff. And it's great to see that the ecosystem is growing. We certainly need a lot more of that. So we encourage not just founders to build, but those who sit on the other side of the fence in terms of the investors. We need the capital flowing into the region and not out. So thanks a lot, Jeff. I appreciate you for that. Um, Barbara, would you like to go next? Introduce yourself.
Great. Hi, everyone. My name is Barbara Hartenek. I'm originally from Argentina, and I lead an NGO that's called We Invest. It's based in the US, and we have two communities of women in the ecosystem. One is called We Invest. It's a community of more than 420 women in investment. We cover from VC, CVC, private equity, family offices, accelerators that are for profit, and some angel investor networks like Sandra's. And we unite these women. We are, as an NGO, cannot invest directly, but we try to help out, bringing on the potential they have into their careers. We have four pillars. One is networking. The second one, it's upskilling, helping them with everything that's related to knowledge. The third one is mentoring, and the fourth one for us that is super important is speaking opportunities. So we help out across Latin America, the United States and Spain, where we have ambassadors in more than 24 countries. And the other community is called Emprendedora LAC. It's a community of female founders in the tech world industry. They are more than 320 across Latin America and the Caribbean. That's why it's LAC, LAC in the name. It was built as an initiative within the IDB lab to visualize women in STEM doing great things and amazing things. Whenever you talk to them, every time I get surprised by the talent and the amazing things that they're developing. And both communities were built by Marta Cruz and Susana Garcia Robles, that these are kind of a rock stars in the ecosystem. Both are Argentinian. One lives in Buenos Aires and the other one in Virginia, but works in Washington. Apart from that, I have another couple of hats going on. I'm also in the board of advisors of a couple of companies, also in another NGO called ACDE here in Argentina, and I mentor in different universities. And for example, here in Argentina, and in Switzerland. And I'm since a year and a half, I started angel investing. So I'm really happy to be giving back also the opportunities to other women across our ecosystem. Even though I work with women, I try to facilitate everything for the entire genders going on, because we believe that talent doesn't have a gender. But the opportunities that are for women are less, so we try to develop them as more than we can. That's a little bit about me.
Barbara, that's so needed. In our inaugural cohort, we had 38 enrolled founders, graduated 17, and of those 17, I'm proud to say that seven were female. And our first founder who got accepted early into Founder Lab, which is our second program where you raise your pre-seed, was a female founder. So, so we need more females in the ecosystem, and I'm really excited that, that you're flying that flag high. And I'm sure the
Yeah.
female founders on today's call will benefit immensely from everything that you have to share. So thanks again. Tracy, please introduce yourself.
Right. Well, good evening, everyone. I'm really happy to be here. I'm the director of the Blackstone Launchpad at Syracuse University in New York. I am probably the only person on this panel that is not a funder. Um, I run an on-campus innovation and entrepreneurship center that covers all of Syracuse University's 13 schools and colleges. So at our space, um, we offer roughly 200 events during the academic year to our student entrepreneurial population. And those offerings cover both business development topics as well as entrepreneurship skill building workshops and presentations. So throughout the year, we're providing one-on-one support, ideation events, hackathons. Our alumni are doing presentations and fireside chats. We put networking events and skill matchmaking events together and have about 14 different funding opportunities throughout the academic year for our students. And those could be pitch competitions, pop-up shops, or showcases. We do offer a small innovation grant fund for some of those folks that do need that little bit of early stage funding to get the company incorporated or register their IP. And it's been around for about 10 years. I am an alum from Syracuse University, and it did not exist when I was there, but I have been the beneficiary of watching some of these students turn into multi-million-dollar companies, which has been fantastic. Um, the reason I'm here, Rawle, thank you so much for inviting me. I'm just getting
My pleasure.
involved with the FI Caribbean community, but long before I was in this role at Syracuse University, I was a corporate finance attorney in the Caribbean. So I had worked in mergers and acquisitions and corporate finance law with Thompson Patterson, Lex Caribbean, JD Sellier, and then in the Bahamas with Graham Thompson. So I think, and I don't know if this is still true, I am the only American that is called to the bar in about 10 jurisdictions in the Caribbean. So that covers
Wow.
Anguilla, Antigua, Barbuda, Barbados, Dominica, Grenada, St. Vincent and the Grenadines, St. Lucia, Montserrat, Trinidad and Tobago, and I'm registered in the Bahamas. So I've been wearing that badge of honor for years now, even though I am now officially retired. But my connection to the Caribbean is strong. I lived there for more than a decade. My son was born there, and we go back to visit quite often. So thank you. I'm really grateful to be here. I'm excited to meet you guys and learn from my esteemed panelists.
Awesome. Thanks so much, Tracy. So I still don't see Ugo. Let me just check one last time. Ugo, if you are here, come off mute, buddy. Okay, I don't see him. All right, so let's get things started then. So thank you all. Really excited to have you all here again. Sandra, let's kick things off with you. So I know your work at RevUp Caribbean has more or less transitioned from a virtual incubator to more of a lasting digital ecosystem supporting founders across the region. What specific gaps in the Caribbean startup funding and investor readiness do you identify early on? And to follow up on that, how has RevUp adapted its model over the time to address these gaps? You're on mute, Sandra.
Yeah, so thanks for inviting me to participate in this. I always love talking about the work we're doing in building the ecosystem in the Caribbean. So in my introduction, I made the connection between RevUp Caribbean and First Angels Caribbean. So RevUp is an outgrowth of First Angels. And one of the things we recognized when we started RevUp was that, you know, we know that entrepreneurship is hard. We had made a number of investments and several of the companies were failing. And so we had to, sort of stop and take stock of what we were doing and why these companies were not living up to the promises that they had made to investors. So I think the first gap we saw was that, you know, the founders really had very good ideas, you know. So the gap wasn't in their innovation. The gap was in their business knowledge and their fundamentals. They weren't thinking like CEOs of scalable entities. They didn't understand financial management, how to implement management information systems, the importance of generating their monthly financials. They didn't know how to manage their teams optimally. Of course, their governance was missing. And for those that we had invested in particularly, they weren't staying true to their agreements with investors. They weren't honoring their information requirements, and the reporting structures that, you know, their boards required. They were essentially running their companies like, you know, lifestyle small businesses, not the high growth ventures that they had convinced their investors that they would scale with the capital that we provided. On the other hand, you know, we had angel investors who were, you know, who had capital and were willing to invest it in these companies. But you know, we didn't have a pipeline, a reliable pipeline that as the manager of the network, I could vet, prepare, and present founders who could articulate, you know, a clear, a reasonable valuation of their business, who could articulate an exit strategy for the investors. So when we took stock of all of that, we decided that we needed to create RevUp as a virtual. It actually, in 2021, we had no choice about being virtual because we're in the midst of COVID. And we wanted to move beyond just business training to create a rigorous but well-structured investment readiness program. So, you know, our curriculum not only includes a number of, it's actually 70 hours of management training and 20 hours of investment readiness, looking at things like valuation and exit strategies, protecting IP, building financial models, and, you know, ensuring that corporate governance, for example, is non-negotiable, and really coaching our founders to, as I always say, behave today as they were 100 times bigger, right? To build trust and to build transparency from the get-go. So our program includes mentorships, you know, a lot of coaching. We have partnerships that, you know, provide scholarships and access to markets, particularly in the EU and Latin America. And you asked about our evolution into a digital ecosystem. By last year, when we launched our RevUp community, we had 165 founders come through our program. And so we wanted to create a lifelong digital home for those founders, to provide them with ongoing peer learning, continuous access to mentors, and really a platform that they could use to collaborate with each other long after, you know, their graduation. So, you know, that's how we have evolved. And you know, we still have some evolution to go. We're continually adapting our model, not just to address the gaps that we've found, but also to address our own sustainability, because we've been dependent on grant funding, but everybody knows all of that is drying up. So we have to be looking at ways that we can provide these services uh, and continue to exist.
Yeah, I mean that resonates so much, Sandra, and I'm hopeful that through Connected Caribbean that we can find parts to that sustainability, because in as much as
Absolutely.
startups need support, the entrepreneurship support organizations who in turn support those startups also need to have that support. So it's really important. And much like Found Institute Caribbean, I can see where at RevUp just laying those foundational building blocks of these startups, it's critical, because founders come in so green, and they immediately think that they're ready for money when they're not. There's a 0 to 1 stage that they need to get to before they can even start asking for money. So
And I think the critical thing with us, Rawle, is that a lot of the people involved in RevUp are angel investors themselves. So we are coming at the program from the point of view of the investors and ensuring that the startups are ready and understand what what it means, what the responsibility is all about, because a lot of them still don't understand the responsibility that they have to their investors. So that's really important.
yeah, thanks again for that, Sandra. So Barbara, pivoting to you, I know that you shared before that at We Invest LatAm, you're focusing on connecting women with investors and empowering those females to access leadership across not just venture capital, but also private equity and the angel networks within Latin America. Share a little bit about some of the trends that you're seeing right now in LatAm, especially as it relates to gender diversity in startup funding, and how might the Caribbean ecosystem learn from, or at least leverage some of the approaches that you're already undertaking in LatAm?
Well, thank you. Yeah, we're seeing some trends coming through Latin America. Latin America is like a region that maybe it's a little bit more advanced than the Caribbean, but I think you can learn from our mistakes and go through them. We are seeing some progress in gender diversity. I think the pace is not as fast as we would like to. But I think the transformation is happening mostly because there are more women that are becoming investors, and so the capital allocators are changing a little bit now. Also, we've been seeing a lot of not only gender lens investing, also a lot of impact investing. We've been seeing many funds that are also being asked by their LPs, that are if anyone doesn't know what an LP is the investors of the investors. So many that are institutionals or the LPs are beginning to be more like professionals and asking more information also regarding ESG, also regarding more data. Regarding more data also in the portfolios that maybe it's a second fund or a third fund that they're actually raising, and they're asking about their portfolios of the previous funds, of how the managing or the founding members of those startups, what are their genders? It's asked right now. Regarding everything that's related to impact investing, we've been seeing many funds of funds that are not usually using because impact investing normally has lower rates of expected of I'm not saying
Return?
Yeah,
bridging.
thank you. Thank you. My mind in Spanish and English uh, sometimes collapses at this time of the day.
Está bien.
Yeah, but yes, and another trend that we are seeing also regarding financial instruments is that many funds are getting into secondaries. That's a market that is asking for liquidity for startups. Is actually like something that this year will be like the topic. Last year we did some trainings about it, and they were the most where the most attendees were. So I think those are kind of the trends. Regarding apart from AI and fintech that are the verticals that are being most invested in Latin America, as a community of women, what we see also in women particularly is that we have many women in verticals that are more long term. So biotech, edtech, and maybe agrofood. All these verticals take a longer time for the returns, and many women are coming from different backgrounds. We have a lot of women that are physics or researchers or biochemists. So that part is mostly encouraged. And I have some numbers that I want to show you because we know that the pace is not as fast as we would like to. But there was a report last year about women, and I think the number speaks by themselves. In 2019, only 17.3 of startups that were invested had at least one woman in their founding teams. Today, the number is 37.7, so it's more than double. And CEOs that are women went from 10.4 to 16.4. This is in Argentina because it's made by ARCAP, that's the local capital association. But I think this can be related to also in different countries. And the teams that are within funds that are managing the funds, the percentage of women went from 17 to 19.6, and those are roles that have the decision-making power. So for me, it's a little bit of like super glad to see that this is actually changing. I think the region in the Caribbean can maybe go through these teachings and do it faster. Like go and stay like put it as a baseline of how to do business. Talk about diversity, talk about talent, take into account impact investing as a way of doing business, and many things will work perfectly.
Yeah, I mean it's a wonderful and really important point that you make there, Barbara, because oftentimes here in the Caribbean we tend not to look at Latin America as a market, even though it's our closest market. In the past, it was because of the language barriers, but I think with technology now, we can't use that as an excuse.
I don't know how we
So
don't co-invest.
yeah,
Like
so we need to see more
something
of
that
that,
we've
and
been.
I'm really excited to see that you're doing impact investing with patient capital as well, because some of the verticals, as you mentioned, would probably necessitate a lot more research and development funding and capital intensive funding as well. So that certainly augurs well for the region. So thanks a lot, Barbara, for sharing that. Really appreciate that. Um, Shifting gears, I see Bogdan is entering. Just let him in. Shifting gears a little bit to the UK market. as
Mm.
it bridges with the Caribbean. Jeff, you most certainly have a really strong track record of deploying early stage capital, and I know that in the UK you have those frameworks, the seed enterprise investment scheme and the enterprise investment scheme to support founders at that post investment stage as well. So from your perspective, being based in the UK, what are some of the key differences that you're seeing between European funding ecosystems and emerging markets like ours here in Latin America and the Caribbean? And to follow up on that, how can founders bridge those expectations when looking for seeking out global capital?
Um, yeah, okay. So there's a couple things in that. In terms of the UK and the seed and the enterprise investment schemes, it's probably I'll just probably start with that and explain what that is, just to everyone, because there's a bit of relevance. Um, those are schemes that have been set up by the UK government to encourage people who would invest, but probably not invest in such an early stage or such a risky business, encourage them to actually consider investing in that earlier stage, in that riskier business, by offering them tax reliefs for making that investment. So the big sister called the Enterprise Investment Scheme and the little sister called the Seed Enterprise Investment Scheme are both schemes. In one scheme, investors get 30% of their investment back in tax that they've already paid. So it's a really strong incentive. Any losses that they make through that investment, they get a bit of tax off of that as well. And they also get to cover off any capital gains tax that they have to pay from other investments that they make. And that investment that they make is capital gains tax free if it does well. So it's a really, really strong incentive. The SEIS, the younger one, the smaller version, is a 50% tax break on it because you're investing in businesses that are really, less than 3 years of trading. So those are schemes that allow really strong incentives to put money into this space, and that's been phenomenally successful, to the extent where other European countries are not trying to mirror it. Now, the reason why I say it's relevant is because, in my research for the fund that we've set up, Trinidad has a scheme just like that no one uses, and is when the enterprise investment scheme started, Trinidad kind of did a mirror and a copy of it, but no one actually uses it. It's almost dormant. The all the legislation is there, it's just not applied. The rules are slightly different and slightly questionable in how you apply it. For example, you have to name the company, whatever it is, plus some sort of name at the end for it to qualify, which makes no sense to me. But the point is that I have seen that there are attempts to try and copy successful schemes, but for some reason or not, those have not been implemented in the way that helps. Um, for founders looking to access capital, the biggest thing you probably need to understand from locally or regionally to internationally is that from what I have seen so far, and of course Sandra and co are much better at understanding this than I am. Um, there seems to be a slightly different mindset in terms of how people approach investing. Um, from my conversations so far, a lot of people look at investing in terms of debt as opposed to equity. So a lot of people will give you a loan, and they talk about, well, how much interest they're getting from this thing. Um, and so that whole debt mindset is really kind of set, particularly around, and again, this is only my limited experience of interacting with the region, particularly around wealthy, established families in the region. There's that culture. So that's the first thing you probably need to kind of understand that you're up against. There's a very different approach to investing from the UK to the US. It's a very, very different approach, and you have to be aware of that as well. The US tends to be significantly more aggressive in terms of how they invest, in terms of from valuations and growth expectations, they're much more aggressive. So they'll put a lot more money into your opportunity, but they expect you to grow much faster and everything is bigger. In the UK and in Europe, is a significantly more conservative approach. Everything is about profitability. There's smaller investments, um, definitely smaller valuations, and there's not a growth at all costs kind of mindset. This is a let's get this business to work. Let's build this business, and then we scale from there. So there's the fundamental different approaches you have to take if you're thinking beyond the region, in terms if you want to go left or right, UK or US, but also within the region. Again, from my limited experience, there's that kind of with the and that's if you're approaching investors directly. There seems, and again, I can't talk too much to this role because again, my limited experience, there seems to be not as much developed institutions that actually support the whole ecosystem, which is I think, and I see that being done in really kind of sporadic kind of efforts, and there's nothing that seems to be super really joined up. um
Excuse me, Jeffrey. I don't know
yes.
if anybody is having this problem, but you're sort of getting lower and lower. I'm not hearing you very well.
Okay. Tell me if you can hear me now.
Much better.
Yeah,
Yeah.
hearing you better.
Yes.
Have I missed out on have you missed anything?
No, no, I
Okay,
haven't
fine.
really.
Fine.
No.
No, okay, thank you for that, Sandra. So yeah, so that's kind of my observation. And as my recommendation for you is to just probably just try and understand what those different markets offer in terms of investors, so that you have that mindset when you're approaching investors to talk to. If that helps, Rawle.
Yeah, Jeff, and
Well, I don't know if I can ask Jeffrey
yeah, of
just
course,
a
Sandra.
question. If is there any documentation of those schemes in the UK? Because I think that certainly our markets are much more aligned to the approach that investors take in the UK rather than in the US. And our founders are really looking to the US with these huge valuations and so on. But
Yes.
are you aware of, do you have any studies that have been, or reports that have been done on the effectiveness of these schemes that you talked about?
Absolutely. I can share
I
that
would
with you.
love if you could share
Yeah,
those reports.
absolutely. I can share that with you, and the amount of money is raised, the amount of the GDP is generated for the
Yeah.
economy. We have all those
Hmm.
schemes. We do have the same issues that you have, particularly with Barbara, in terms of diversity from an investor perspective, from a founder perspective as well. They're still struggling to do that. A stat that, we have an association that is called the EIS, is the Enterprise Investment Scheme. So the EIS Association, we're a member of that association, and they do some studies, so I can share that with you. But one of the
Yes.
studies showed that only 9% of women are advised to invest from financial advisors. 5%, sorry, by financial advisors, which is a shocking number because, if you think of your LP, which is your investor who invests in our fund that we invest in founders, it it it's very, very uh biased towards a certain kind of stereotype. Um, so yeah, so sorry, that was off topic, but yeah, I think that's the key thing to think about in terms of what your investors want and what they expect. That significantly frames, who you're approaching and what will be expected of you.
Yeah, and from what I'm hearing there, Jeffrey, it seems that our island nations or as a region, we need to sort of rally around a single innovation policy that sort of serves as a blueprint guideline, uh, so that VCs could have a bit more, peace of mind to make the investments in the region. Um,
Yeah, yeah, you can try and do it through, government and legislation. Uh, I love the Caribbean, but I don't know how easy that would be to actually implement and put in place. I just wonder if a trade body association would be a better approach where you have the likes of Sandra's setup and all the other outfits coming together and creating their own policies and creating their own frameworks and agreeing to that, and then actually turning it around and lobbying the respective governments and saying, look, this is what best practice looks like. This is the approach we should be taking, and just kind of do it yourself, really.
yeah, so I think
That's
I
the
think
approach we
Sandra,
have had to take
Yeah.
We need we need to add that to the agenda next week
We kind of going
for
off piece
for
there a bit, but
connector,
yeah.
yeah.
Yeah, sorry.
And
But yeah.
I believe Ayodel is on the call as well. So Ayo, if you're listening, I know with your legal mind, you can certainly help in that endeavor too. So yeah, so Jeff, thanks a lot for that.
Yeah.
Appreciate those insights. Tracy, as you have shared, you're not necessarily a funder, but you work with funders, so at Blackstone's Launchpad at Syracuse University, you're building these university ecosystems to help grow the entrepreneurial skills, the founder mentality, that sort of early venture formation. So based on your experience at the university, how important do you think it is for founders to have that sort of formal education, that structured ideation support around early venture coaching as it relates to, the founder's ability to secure uh, funding later on? Is that formal structure needed, or should we do like Zuckerberg and drop out of school?
God. I'm not going to encourage anyone to drop out of school.
Mm.
Just putting that out there since I work for our university. But it's a great question. And it's actually a conversation that comes up in our Launchpad quite often. But so in preparing for this event, in full disclosure, I have the benefit of this question in advance. So I was able to kind of canvas some of my student entrepreneurs that I've mentored over the years. And when I spoke with them, some of those that had closed very large, successful rounds, uh, some of the most helpful formal education that they pointed back to was not were not the business courses and were not the entrepreneurship related courses, the ideation courses at all. They uh, pointed back to courses that help them develop their product or service better. They pointed to coding classes and open source mapping class and um, data analytics classes. And I thought that was kind of interesting because, we actually have majors and master programs in entrepreneurship, but none of them were referring back to that. The consensus really seemed to be those classes that allowed them to deliver a better product and a better service, to understand and to address their customers' specific pain points and needs, seem to be the courses that they tended to refer to as being instrumental as they develop their company as a student. But the more prevalent thing they said when I was talking with them is it was not the formal education or formal ideation to support. It was more the coaching and the mentorship and curated network connections that they found more valuable for their trajectory to get to investors. Um, so when we were talking about, all the things you need to master as a solopreneur before you've even built your team, whether that's customer discovery skills and market research and HR and product development and finances and marketing and sales and the whole gamut. Um, that list is just endless, and you cannot be great at everything, but you do need to learn how to scale up your skills as quickly as possible and as cheaply as possible, in order to move the needle forward. And all the folks that I spoke with, the answer really was more on the coaching side and the mentorship side. And they definitely felt that taking advantage of key workshops and presentations and meeting those keynote speakers and getting on each other's radar and attending community events helped them mature and gain skills that they found were incredibly useful in getting to a company that was ready to go to market and take on investment. Some have taken part since college in incubators and accelerators in the region or across the nation and gained a lot of support through EIRs and key mentors. And so again, that came back to being engaged in significant networking and learning from those opportunities. I was thinking about, when I lived in the Caribbean, I didn't really know about any incubators or accelerator programs. And so kind of begs the question now, hearing about what RevUp is doing, amazing stuff, taking advantage of anything you can when it comes to your Chamber of Commerce or your economic development organizations in your area that they may offer is going to be that is relevant to your business trajectory is, I think, something that's probably going to benefit you more than the formal education because you can do it quicker and you can develop a network at the same time. And so those were some of the themes that the folks that I was speaking with were coming up with as they were thinking back on their journey of course load versus networking and
Yeah.
utilizing ad hoc opportunities.
Yeah, I think we're all going to date ourselves here when we say that when we were in college, there was
Right.
no such thing as entrepreneurship or innovation. You just did a business degree. And if you did a business degree, your parents would be disappointed because they either wanted
Mhm.
you to be a doctor, lawyer, or an engineer, you know?
Mhm.
So I think now it's so different and I see the value in it because it complements, for example, what RevUp is doing, what FI Caribbean is doing, helping those future entrepreneurs sort of gain those foundational skills so that when they do embark on that journey that they're better prepared. So thanks again, Tracy, for sharing that. Sandra, as we were talking about, building those foundational blocks, given the strong emphasis that RevUp places on mentorship, on corporate governance, and of course your investor connections, what are the top three things that you think that founders actually typically overlook when preparing to raise capital? And as a follow-up, how can they better position themselves to attract angel or venture capital?
Rawle, I just wanted to comment on something both you and Tracy said. This notion, because I'm dating myself too about when I was in high school. If you were doing business, you didn't have any, you weren't smart. And I think it has really affected us because people don't have the foundation that they need. And Jamaicans in particular are very entrepreneurial. So they want to start a business. They just don't have the foundation to do it. They don't, so I think we really need to lobby as well for entrepreneurship to be in school, in the school curriculum. There isn't enough entrepreneurship, even in our universities, at University of the West Indies, at CAST and the others, there just isn't enough emphasis on that. But to your question, um, so when we look at the what the founders are overlooking. I think one of the things that I've noticed is that um, you know, founders are really focused on pitching and having a great pitch deck, but that's not enough to secure funding. And I think what investors are looking for is early traction. Even if you're in the very early stages, whether you have, a customer database, or you have some paying customers, or you have strategic partnerships, or even revenue, those are for investors, the strongest signals of validation that you can present, traction is really important. It's going to de-risk the venture, and it's going to demonstrate that somebody other than the founder, because, founders are very invested in their ideas, but there's somebody else who believes that this solution that they're offering is good, and they will pay for it or partner with them to make it available to the market, right? So I think that so to position better, I think founders really need to focus more on acquiring and documenting those early customers, because even very modest revenue, or whether they have a wait list of customers, or a customer who has agreed to pilot the innovation, that shifts the investor's perception significantly about whether this is a business that they want to invest in. The other thing is that when founders are pitching, a lot of them are, talking about what this product can do. But what investors want to hear is, what is the opportunity that the business presents, right? So they want to understand, you always see founders talking about the size of the global market. Well, no, we want to know what's the serviceable addressable market, right? What are the unit economics? What's the cost and revenue model? What does a business model look like? What's the competitive landscape? How are you going to defend against competitors? So, because investors are really interested in, how are you going to capture and grow this market? And in doing so, give me a return on my capital, right? So, I would say to founders, when you are pitching, show how your solution creates a revenue stream for the business, or some barrier to competitors. So it's and you have to speak the language. I always stress this. Learn the language of investors. So what's the potential for a return? What's the potential to scale the business? How are you going to mitigate the risks that are inevitable, right? And then I would say the third thing is that, and this is one of the reasons we created RevUp, and what I talk about as a 5 months due diligence process, right? Because fundraising is not something discrete that you do at a pitch event, right? It's relationship building. And as I said earlier, in RevUp, you are meeting constantly with investors. So you are building that relationship. If there's somebody who is interested in your business, you are keeping in touch with them, sharing updates, getting their advice, demonstrating. I mean, the last investee that out of our cohort 5, the latest First Angels investee did this. I was getting updates every week, right? And sort of showing me that they can execute, they're earning my trust. So when they actually get to the point of asking for capital, you are already convinced of what they can do, and what their character is like, how they will be a real partner on the investor journey, right? So I would say my advice to founders would be, one of the great things is that we have a network. So building relationships long before you need uh, the money before you pitch. Um, Build those relationships, share your progress, and really look at your potential investors as partners in the journey, not just somebody who's going to, you know, give you money.
Yeah, Sandra,
That's what I'd say.
I can't emphasize that enough, so just to double click on that last point, especially, to build those relationships. You don't wait until you need the money to then start building the relationships. You need to
Absolutely.
start that way in advance. People need time to get to know you. No one is gonna cut you a check without knowing you. I mean, Jeff knows that due diligence process very well, and he's very patient with it as well. It takes
Yeah.
months.
Yeah,
So
I
yeah,
mean,
so
one of the things we have even done is that we start with um, psychometric testing, because you really need to get insights into who this person is if you're going to build a long-term relationship.
yeah, totally agree. Totally agree. So thanks for that, Sandra. Barbara, shifting gears to you a little bit,
I see our friend Ugo is here.
oh, he is? All right. Okay, so
Yes.
Ugo, we'll add you in on the end.
Yeah, sorry about. I apologize to everyone. I was so ready for this meeting, and I still ended up flunking at the end. So the investors can be flunkies too. So apologies.
No worries, no
It's
worries.
just
I'll
we're
save the
actually in
last question for you
fundraising
then.
mode. So we've been trying to close with investors. So when you're talking about fundraising, trust me, I get rejections every week, and I have to keep revamping my presentation, trying to figure out how unique I am, why I'm the best person to invest in, so I can give advice to every founder as to how tough it is and what you need to do to get across the finish line once you ask me. So let me just wait for you to go through. I'll give you
Thank you,
five
Ugo. Well,
points.
as we say, it's better late than never. So I appreciate you being here, and we'll certainly reserve the last question for you.
Sure.
So thanks a lot. So yeah, so Barbara, just putting the spotlight back on you again at We Invest LatAm. I know there's an emphasis on education and network building. You're focusing on female founders, and the practical steps that early stage founders should ideally take to build those meaningful investor relationships. Um, but if we're to look at female founders and even the broader community, how do they go about improving their chances of securing investment, especially in today's funding climate?
Yes, double clicking in what Sandra said because everything was amazing. I think in a world that's super small, trust is the only thing that matters. So, apart from the long relationships that sometimes can take even up to 6 to 12 months in raising, and many in our cases in Emprendedora Luck, what happens is you have to keep on developing those relationships later because you afterwards gonna keep on raising later. So keeping good relationships, I think, is the key here. And there's a really important or key phrase that in Latin America in Spanish we use a lot is when you go to ask for money, you get feedback. And when you go to ask for feedback, you get money. So get those development of those bonding super slow because investors know when you're pushing the relationship. So go slow, develop it, take your time. Another thing that I see a lot is that many of the founders don't even know the thesis of the investors that they go to pitch. And I see that as a huge error because if they say no to you, it's just because you're not doing your job right. So what I recommend is investigate, research, look for them, see what are their interests, which events they're doing, keep them informed, send them emails, as Sandra said. understand their fund size and their ticket size, because sometimes they're different funds for different stages. So maybe it's not the fund for you right now, but maybe it will be later. And maybe the return profile that they need is not the same if you're in fintech or if you are doing biotechnology. A good recommendation that I can give you is get an Excel or a spreadsheet, put everyone that kind of suits you, and divide them in three classes: A, B, and C. A will be your top tier. B, maybe your second tier. And C, maybe you don't want to work with them, or it's kind of your last resort. And start with B, because pitching for the right investors will take time and you need practice. So start with B, then go to A, and if it not doesn't work out, continue with C. But that's how we teach, at least to our founders, and understand the language, what they ask, what they look for, because at this time it's a relationship that you will be talking to them all day long. And having a good investor is not only money. It will give you the right connections, the warm introductions, the mentorship that you need, the opening the client list, that is everything. So be really smart with the investors that you want to work with. Another thing is you have to be super clear. And if you don't know, say that you don't know, because we see a lot that founders say things that are not true, or it's not quite like that, and the ecosystem is super tiny. They will get to the phone and check that information with other investors or other people, or the person that knew you from the university. It is like that. It's super relational. So be careful. If you don't know, say that you don't know. And for me is, as this it's important, the trust and the credibility. Be collaborative. It opens a lot of doors if you give to the ecosystem, and later people will help you. It's a super collaborative ecosystem, and I really recommend joining accelerators, RevUp, angel networks, communities, Emprendedora Luck if you're female, or We Invest, because warm intros really matter. I think there's some silver bullets that are lost in trying to force things happening, that would be easier to do it in another way. And I don't know if Rawle,
Well,
if I'm answering your
that's
question,
really
but
good. That's really good, Barbara. And I hope everybody on the call either has their note taker on or they're actively taking notes, because Barbara is like, just letting it rip in terms of practical steps,
sorry,
right?
I'm like a bullet person,
No,
like
but it resonates. I mean, even with myself on LinkedIn, I get so many inbound messages with founders just pitching, and it's so obvious that they never even took the time to read my profile to see what I'm interested in, which geography I'm in, right? So that it's
yeah,
relevant, so yeah. So I think on for the founders, you definitely need to put in that homework first. So Barbara,
yeah.
thanks a lot for sharing those insights.
And also something is like, funds work together also, no? So maybe the fund that gave you them, or the angel investor, goes and talks to the pre-seed stage fund, and that pre-seed. So you never know where like the ripple effect gets. So now.
Yeah, exactly. Wonderful. Thank you so much, Barbara. So Jeff, pivoting to you a little bit, we're all aware that, a lot of early stage companies often struggle with timing, both in terms of when they're seeking the funding and more so how they look to scale post raise, right? So based on your experience in the UK, with your portfolio and your deal flow, what are some of the most common missteps you see founders making when they're preparing for their seed or even their Series A? And as a follow-up to that, what are some of the, I don't know, practical guidance that you can offer to Caribbean founders who are aiming for more international investment?
Okay. Before I start, I just wanted to kind of double click on Barbara's point about just founders understanding who they're talking to, and investors, because I mean, we get applications, we get, I don't know, to almost 3,000 applications a year, and the amount of applications that aren't relevant to what we clearly state on our website is our, what we're looking for is shocking. Um, Luckily now we have AI to kind of screen that, but that can be really frustrating for investors. In terms of founders and the key things I see, um, you kind of touched on it, Rawle. Timing is important. Timing is extremely important. We see founders repeatedly underestimating how long it takes to raise a round, and not really appreciating that fundraising is almost a job in itself. Um, and you have to try and manage that. You have to try and get that right. The big thing I always tell founders is about setting milestones. And there's a reason for setting milestones, because this you have to think of this as almost like a leapfrog, and you have a series of steps. And in order to get to the next step, you have to know what the next investor is going to look for. So if you talk about pre-seed, seed, and Series A, if we look at those three stages, if you want to raise money from a Series A investor, you have to understand what they're looking for, but also what sort of revenues you need to be generating before they even take a meeting, take a call. What are those key things? So you say, okay, I need 1 million of revenue before these guys will talk to me, which is actually, it's a really specific requirement in the UK. Okay, how do I get to 1 million revenue? How much money do I need to raise now to get my business to that point, and look at it as those sequence of steps. That's so understanding your milestones, understanding how you set that up and say, okay, this is my first phase, this is my second phase. I think is really important, and I don't see that often enough from founders. You almost have to plan that growth journey out in some level of detail. And just to touch on that, that is different from your product or your service or whatever it is. This is about how you build a business as opposed to how you're launching a product. So you've got to separate that and say, actually, the product is the thing that makes a business work, but how do I scale this business? What are the stages? So that timing, I think, is really, really key. And understanding that, and I'm sure, so I don't know the stage that the founders are on this call are at in terms of that activity, but you will soon be aware of how very difficult it is and how very time consuming it is to do that fundraising. Part of my role, and I think Hugo mentioned it as well, part of my role is to deploy money, but it's also to raise money. So I understand as well how hard it is to go and find investors, raise money for investors, and kind of do your pitching. 2 days ago, I had a 45 minute presentation in front of 200 investors, and you just have to kind of go through that activity. So yeah. So the point is, it's intensive. It takes you away from your day job, so you have to manage that properly. It takes longer than you expect. So a lot of founders we see run out of cash because they said, okay, well, I'll wait till 2 months left of cash before I go looking for more. That's absolutely the wrong strategy for two reasons. For the first one I just said, and you just don't have enough time to raise those funds. So if you go with anything, and the other thing is, um, Barbara touched on this. If I know I want to raise a Series A and I know I'm not ready for it now, and I know I have to raise at least 2 rounds, I want to be talking to potential Series A investors saying, hey, I'm not raising funds now. I just want to get on your radar. My plan is to come back to you in a year's time to raise money. I'm going to call you every 6 months or every 3 months and just let you know how I'm getting on. That is that is extremely powerful as an activity. It doesn't actually take that much time for me to do that. If you pick the right investors, you're just touching base. It's just a catch-up call you're going to have with them. Um, and that's phenomenal in terms of having that. So when the time is right, that investor feels so comfortable with your story, with who you are, your journey. They can actually give you feedback. They can tell you what you should be looking like to actually get investment from them, so you can plan that out. It really is about planning, a series of planned steps. Um, that's my biggest kind of advice to you in terms of you got to think of it that way.
Thanks for that, Jeff. Yeah, so it is another job, fundraising by itself. And oftentimes, yeah, that founder and CEO,
It's
that's
not
that's all
easy.
they're doing like for
Yeah,
3, 4 months is
yeah,
just laser focused on fundraising and nothing else at all. So yeah, so I guess it's the planning is in the details, to ensure that there's some structure to that approach. So
yes.
appreciate those insights, Jeff. Um, Tracy, getting back to you with students at Syracuse University, can you share a little bit more around some of the biggest mindset or preparation shifts that you see in the student founders there who are transitioning from, let's say, ideation to now seeking real world investment? And as a follow-up to that, how can founders in our region, in Latin America and the Caribbean, adopt similar practices or frameworks outside of that university environment?
Thanks, Rawle. I'm just sitting here taking notes on things I wanted to say, but then y'all are beating me to it on so many things. It's so, so I'm loving that we're all like, championing the same um, primary um, best practices, which is great. Um, when it comes to working with the companies that are or founders that are transitioning from ideation um, to fundraising, like the first big step that we're encouraging every single one of them to do, and this applies to student entrepreneurs or other entrepreneurs I've worked with in the past, is doing thorough and extensive customer discovery. So that's the first step. We always say it's an underrated exercise because it's the first step we see in giving yourself a better chance of success by really understanding who your customer is and what their pain points actually are so that you can craft a solution that is going to resonate with them, that it's going to be better than the competition out there that they would have paid for yesterday. So that's something we do is, it's right when they are coming in the door and they have that idea is really giving them the tools to do proper customer discovery and nailing that. I was trying to write down some points so that I didn't become repetitive. But speaking to founders specifically, like I'm coming from an environment where not all of my student entrepreneurs are going to be seeking VC type of investments. They aren't going to be doing seed rounds, Series A's and B's, but they might be looking for funding, and they might be looking at grant programs and accelerator programs to get non-dilutive funding. They may also be taking on some angel investors or some key strategic partnerships to grow, or they may be funding through sales. So I don't have a large volume of the student population that is doing the kind of large investment we're talking about here. But for those that have, there's a few key things that I think resonate for all of them. And one has been resilience. We try to coach them not to be afraid of rejection and not to be afraid of failure. Learning how to take no for an answer. Even if you have curated a list of 1,000 investors and you are squarely within their investment thesis, you will hear 150 no's first before you get one yes. And knowing how to continue to not take that personally, not let that chip away at your confidence and remain true to your mission and your purpose and keep your passion. Um, You will get that, yes, if you are on that, if you stick to that. So I think resilience and perseverance to keep going in the face of uh, negative responses is something that all of our folks have learned to grow that kind of thick skin. The other thing that I think we're all kind of been hammering is your network and leveraging and nurturing that network. And you don't get in the rooms to pitch to even angel investors if you don't put in the dedicated time to an effort toward building out your network. So we encourage everybody to think of every conversation as part of the process in building that network. You just never know if you're sitting on the bus next to that first early adopter or that first customer. So we do hammer home the networking events and networking skills. We do business etiquette workshops. We do pitch, presentation skill workshops. We do a lot of practice with elevator pitches so that wherever they are, including on an elevator, they will be able to like share their story. I think that Jason Jason, was it Jason that just mentioned, or Jeff mentioned that they don't recognize that it's a full-time job for the most part, doing a large raise like this. You have to have a pretty good team to keep the wheels on the bus if you are the key person on your team doing the fundraising efforts, because it is time management becomes absolutely critical. Talking to these investors is like speed dating. No one wants to invest in you until you get some clout. And then as soon as you get some momentum, people just start coming out of the woodwork and asking to get in your round. So you are the jockey that they want to invest in. They're investing in the team as much as they are the idea, the solution. I'm trying to think some examples. I'm losing it.
But that's
I
really helpful.
one
Those,
I
those,
had I
yeah.
had one of my companies they learned this the hard way because every time they spoke to an investor, the investor wanted something more to be in their pitch deck, and they started to keep revamping, and you cannot really do that. Your time is precious. And so if I can say anything on time management, it would be, try to use it as effectively as possible and have two decks. Have a deck that has a lot of the comprehensive nitty gritty. I've answered every question in bonus slides, in, backup slides, and have your standard investor deck. We do a lot of prep work before we even introduce anyone to investors in making sure those that are looking for external investment that we're talking about today already have their data room in good shape so that if their due diligence is started, they are not looking like a deer in headlights and they are able to send over that link and commence that process. We do some initial training on what the early types of financial instruments look like. So they're not completely unfamiliar with what a safe looks like, the different types of safes, what a convertible debt note looks like. We go through what the terms of a term sheet should be, and what ones you'll probably have very little negotiating power with, but what ones, as an early startup, you might have some pushback on. So we will try to prepare them on a document side a little bit. And then storytelling. The founders that we've spoken to have talked to when they have shared what their experience has been with investors, they have said storytelling is everything, especially in the early stages. The investors are betting on that energy and that passion and the vision that you have for your company. So you need to make that investor feel that excitement that you have and that you're building for your company and get them emotionally hooked. I think it was Sandra that was saying, articulating key traction or milestones achieved, having that wait list, having demonstrating that you have 10 letters of intent with potential customers already signed up. Our entrepreneurs that have done these raises recognize there was a fear of missing out on the part of some of these investors. Once they learned there was momentum, so they capitalized on that. And then the final point that I was taking away from the conversations I was having was language, which I think we already have addressed a little bit. But they were saying, it comes down to that human interaction and being able to speak fluently the language of an investor, which is one of the most important languages you can have and that you can develop. And it's different than the language of your customer, and it's different than the language of your tech, but it is the job of that CEO of that early stage company to be fluent in all of those languages. So those are only the last key points I was trying to type up quickly to share, but I would definitely emphasize the points that my other colleagues have made were all absolutely 100% on my list.
Thanks so much, Tracy. I mean, that's a wealth of little interesting nuggets there, especially as it relates to building your network, knowing how to tell a good story. The narrative is so important because investors are people. They need to buy in to what you're doing, and you are the one who has to convince them. So the numbers tell one story, but you need to be able to translate the numbers into a compelling narrative. So that's so important. So thanks again, Tracy, for sharing that. All right. So Ugo, we're going to close with you. And then I'd love to give everyone on the call an opportunity to ask the panel some questions. I know that we're already on time. So folks, if you have another commitment and you need to drop off, I won't be offended. All right. But we'd love for you to stay. We could probably stay for another 15, 20 minutes or so. So we'll have sufficient time for Q&A. So Ugo, what I'd love for you to do as we close off this really engaging conversation is, of course, first introduce yourself. And then as it relates to Mscale's Caribbean Venture Capital Fund, your fund, I know that you're focused on closing the gap within CARICOM and I believe the Dominican Republic. So how does Mscale tailor its investment thesis to some of the unique challenges and opportunities right here in our region? And as a follow-up to that, what are some of the lessons that founders can take from your investment criteria? So founders applying, and we all touched on this before in terms of understanding the VC's thesis and how important it is to ensure that alignment. So Ugo, the floor is yours.
Okay, thank you so much. Again, massive apologies. I hate to keep a whole bunch of people. Look at all these wonderful people on this call. Massive apologies. But let me quickly talk about Mscale. Mscale is a venture capital fund that was set up by the Development Bank of Jamaica, the origin of the fund. And they kind of put out an RFP stating that Jamaica had not had sort of an official venture capital fund in 30 years. And so the thesis that I sort of sold them was the idea of a venture capital fund with Africa, actually. It was sort of marketing founders that are Caribbean and maybe selling their services and products throughout Africa, and also inviting African founders into the Caribbean to partner with people of the Caribbean to market to the globe. And I think they like that concept, and the team that selected us ultimately. They gave us $5 million, and we had to go out and raise another 10. And our fund's target is $50 million. And so we've raised 15.4. We've got some additional 10, 11 that will be coming on board soon and more. But I think I'll talk about the founders first, but I wanted to address some of the issues about fundraising and the difficulties and the rejections. So I get rejections every day, and I get rejections all the time. And then I give rejections also all the time. So it's a mutual love fest. But what I found to be the most important is in your own head. You got to believe that the person in front of you saying no is not going to stop you, right? You got to really believe that you will have done your homework better than everybody else. And if they're not seeing the opportunity, it's actually their loss, not yours. And if you fully believe that, then you're going to be able to pivot when you get your no's and your and when you get your yeses, you're not going to rest on your laurels because you know there's another no around the corner potentially, right? So I would say fundraising, as someone once said, is like taking your lower lip and pulling it over your head. But you have to be the kind of person who has a lot of lip, that they can take that pressure. So our Caribbean thesis has pivoted over time. You start with something and then you think then as you meet people, talk to people, you start to realize that your original concept may not fit exactly in the Caribbean, and you have to figure out what will fit. And the other thing is that the Caribbean is a very difficult place to raise money for because the countries are very small in size. For instance, Jamaica's 2.7 million people versus Nigeria of 220 million people. An investor from the US is going to think, well, where do I want to spend all my time? The secret juice might be in Jamaica, but they're just doing a quantity assessment and a quantum of their effort. But what I'm finding is that the true gems are actually in the Caribbean, but we have to resell the Caribbean in a different way from a fundraising perspective. We have to be able to resell the Caribbean as a place that has champions locally. And then you have to show the value of those champions. So if I was talking to a founder, I would ask the founder to, first of all, put themselves in my shoes, right? If they were the investor, would they give themselves money? And if they are really honest about answering that question, they'll know where their weak points are. They'll know, of course, everybody wants money, but you'll start to understand where your gaps are, and then you need to start filling those gaps so that with each subsequent investor you come in front of, you succeed. But first, the other thing I mentioned in some of the notes I wrote was valuation, valuation, valuation. A lot of the founders that I've met so far, they kind of value their companies over the moon. And after you talk to them for a while, you just say, I might as well not even engage this person at all because they've already overvalued the company. Then secondly, the other thing I've experienced so far is that you do the investment, and then you find out the founder has absolutely no skills to grow or scale this thing. And then you're going to end up sitting in the company, helping them to scale, use your network, do everything possible. You're actually working for the founder now to help them to grow the business. So my view is I want to find founders that are versatile, founders that have a realistic assessment of where they are, founders that want a partner, not so much. They want the money, but the money isn't everything. They want somebody who wants to partner with them. There's one founder, and these were guys from Sweden doing something in I shouldn't say everything about them. These were guys from another country doing projects in the Caribbean, and they overvalued the company. And the more I talked to them, I realized they had no respect for the funding that I had sweated blood and tears to raise. And that what I would have with them is problems from day one because they didn't value the partnership and the network that I had and how I could help them. They just wanted the money and then just please get out of our way. We know what we're doing. When you see founders like that, just run because it's a partnership. It's I'm not going to say it's a marriage, but it is a partnership. It's a relationship. It's something that you're going to keep building over the years. I think a couple of people mentioned it in the call that you don't start building these relationships now. You start building them now. The guy who's my business partner, I've known him for 20 years. 20. He never invested until 20 years later. So it just gives you a sense. So I build networks everywhere. And then the last thing I want to say, don't underestimate the power of serendipity. You know what I mean by serendipity? That is, take a chance, go somewhere where you don't think they're going to give you money, or you have no meetings. I got one investor once because they were having a meeting in New York. I just got on a flight to New York. I had no meetings. I just knew they were going to be there, and went there, prayed that I was going to meet them, and by divine intervention, I met them in the lobby of a hotel. We started talking. He told me that I had a gold mine in my fund in Jamaica. I was like, I didn't think I had a gold mine, but he thought I had a gold mine. And now we've been partners for about a year. And it was, so don't underestimate just getting out there, talking to people who might not give you, who might sound like they're not going to give you money. You just might get one. So talk to everyone. Last thing is there's tons of money out there. There's tons of money. You got to talk to everybody, and each rejection is just getting you closer to that. Yes, seriously. I closed my fund in June of this year, June 30th, the final close. And I'm telling investors now, you're either in or out, yes or no. You're either in. I'm bringing you value. I'm not afraid to tell you I'm bringing you value. You'll hear about the value maybe 6 months from now, but I'm telling you right now, you should give your money to me to invest in founders. And if you don't want to give me your money, no problem, no worries. So you, as a founder, if you have a really good deal or business that you've really thought through, you've done everything, you've obsessed over it, you can't sleep, you've sold your house, you've sold your mother's house, you sold your dad's house, you sold your children's house. When you get in front of an investor, if they don't see the opportunity, just move on. I don't know what else. Like, have I answered your question in terms of our thesis? Our thesis is to invest
You
in the
went
Caribbean.
over and beyond, Ugo, so
Over
I
and beyond.
appreciate
We
that.
will invest in the Caribbean. We're looking for founders that are really honest promoters, honest as in integrity. We want to do good deals quickly. We don't want to hold our investors' money forever. So we are trying to get rid of the money as well. But we want to find very high quality founders. We want to find founders we can grow with. We want to find transactions between $200,000 and $2 million. We focus primarily on climate tech, fintech transactions, but we'll look at other things. Right now, we're supporting Jamaica in affordability, like affordable housing that has a modular housing or tech, some sort of tech opportunity. We're looking for viral, scalable businesses, and then we're just looking for founders that we can get along with, we can have a drink with, we know we can grow together with, that are human beings, that are honest. Thank you.
I love that, Ugo. Thanks so much. I couldn't think of a better way to close off the panel discussion, so I really appreciate that, Ugo. All right, I know we're already over time, but I would like to have an opportunity to allow all the founders and innovation stakeholders on the call to ask any questions that they may have to any one of our panelists. Adana or Nike, do we have any specific questions in the chat that we should highlight?
Yes, Rawle. Michael just dropped 2 questions in the chat.
Michael, if you could just unmute.
Sure. I have a couple of questions. First of all, what type of return are you guys looking for, and when do you expect to see it? What kind of timelines are we talking about for turnaround and performance? I really like that a lot of you have kind of echoed that this is a partnership or a marriage, because that's kind of the way that it feels. When you take money from someone, it's a really personal thing. It feels like convincing someone to buy into you. So when are you guys expecting money back for this, and how long realistically does a cycle like that usually work for the first investment within a product?
So I can talk about first angels, Rawle.
Sure. Please do.
Okay, so we fund early stage startups. So our ticket size is, up to maybe $500,000 US. In tranches, um, our term sheet says a minimum of 5x return over 5 to 7 years. But we won't be unhappy if we get 10x. We haven't got there yet.
Should I go
We'd
next?
like to get there.
So I
Should-
want to add to Sandra. We're also looking for 10x, right? And 10x is, we calculated why we're looking for 10x. It wasn't sort of off the top of our heads, but it's over a sort of, our fund is a 10-year life. So in 10 years, it shuts down. But the reason we're looking for 10x is not because we're just greedy people who want to kill entrepreneurs and work them to death. We want to help you create that 10x. It's not just you come on board and then get us to 10x. So we want to find founders that are humble, teachable, want to work together with
Teachable.
someone so that we can together. So let's say, for example, you're only in Jamaica and you have a business that creates these widgets. But I know somebody in Barbados and I know somebody in Trinidad, right, that you don't know. I would then like to connect you with the person in Trinidad and Barbados and then structure a deal. So now we have a platform company as opposed to a one. But I realize that you're a Jamaican founder and you are so good to work with. You have ambitions. You are solutions oriented. When you run into a problem, you find solutions. I help you partner with all these people in all these other places. Now I'm having a chance to triple my return. And then if you're very good and you triple your return, then it's 3 times 3. I'm getting to 9x my return. So please don't feel that we're these sharks who, give you an unreasonable high. We would only invest if we know we can help you to achieve that 10x.
Um, another thing what I want to add is, Michael, I wish everybody asked that question because no one asked that question to us. I think it's a really important question that you should ask. The other thing I would say to you, Michael, is we're not giving you money. We are buying shares. You're selling something, right? So this is a transaction. Um, the value of the shares comes a lot from our belief in you. So there is that aspect to it. But this is, we are buying shares of you. So you have negotiating power. But you should think of yourself as having negotiating power. So I think that is a really good question to ask. And
Yeah.
few people ask me that question. Um, we look for 10x, very, very similar to Ugo. Um, and again, there's a reason for why we have 10x, because we've promised our investors a return. So we promise our investors, and I'll break down our model for you so you understand where this comes from. Um, in our model, we say 40% of our portfolio companies is going to will return all of the value back to our investors. We promise our investors a return of at least 3x. So if you just run the numbers and you say, four companies should be in or around 10x, adding for taking for discounts, that's your 3x return because it's 40% of 10x minus, fees and stuff. That's where our 3x comes from, and that's why it's there. In terms of a time frame, time frames for us is roughly the same, 4 to 7 years is
Four to
kind of the
seven. Yep.
expectation. Again, is how long we think that companies at that stage should take to scale. We are a pre-seed fund. We have the earliest checks in terms of institutional investors. Um, and we understand that it takes a while to get everything up and running. You're going to have a few kind of uh, you know, bumps along the road, and it just takes that time. But I'm glad you asked that question because I would encourage everybody on this call to think of it as your shares that you're selling, that you should be asking those questions to investors.
Thank you.
I just wanted to add one other example of assisting a company. We invested in a company and we realized that they're not going to be able to achieve the scale 10x that we thought they were. And we started immediately looking to pivot to partner them with another entrepreneur in a similar industry who has a lot more capacity and the capacity to scale regionally as well. So it is really a marriage. I just wanted to throw that in, that there are many ways we can help you achieve the 10x, although the initial talent and capacity needs to dwell in the entrepreneur from the beginning.
Wonderful. Thanks for that, Ugo, Sandra, and Jeff. Amit, I see you have your hand up. You could just unmute.
Yes. Good afternoon, good evening. My name is Amit Nath. I'm a two-time tech founder. I'm in Long Island, New York. However, my parents were born and raised in Guyana, and they immigrated here to provide me an opportunity. So I've been in the venture ecosystem since 2019. I've raised over $2.5 million in my past company. So now I'm building something new. My question to you guys are like, what are some of the three non-obvious signals that you see in a startup that you're looking to write a check for? And what are the three red flags that come on your radar that's a no-go for you? Thank you for your time.
You want me to start?
Thank you, Amit. Maybe we can allow Barbara to go since, or Tracy to go first.
Well, I can tell you, we don't usually invest from We Invest, but I can tell you what we talk about a lot. When you're considering investing in someone, and this was said by one of the founders of CASEC. I don't know if you know CASEC, the fund, but it's funded by Argentinians, but it's one of the biggest ones in Brazil. Is you try to see everything as a red flag, because you won't be able to invest in everyone that comes to talk to you. And so you have to have the justification of why you're saying no to that person in your mind, no? So for example, if you go for me, and what we say a lot, if you go for a dinner and how that person treats his service, it can be a red flag. For example, if it's not numbers, saying what I said before, if you don't know something, say you don't know. That is, we have a saying in Spanish, is y si mienten lo chico, mienten lo grande. If you're trying to stuff things up on the small things, you will do that on the bigger things. If you don't have numbers because you're in ideation, say you don't have numbers. You try to look for the numbers. When people say, I don't have competition, you didn't invent it, something like there will always be competition. Look for those things. For me, is this thing of credibility, and especially when you work together in communities, you get the grasp of the person. Sometimes it's like a gut feeling, and I cannot explain why, but you understand if that person is going to be able to do what that person is saying. For example, maybe Tracy can have some more, since we don't actually invest, but yeah.
Yeah, I'm coming at it from the perspective of advising my teams what to do and what not to do, and I would echo your sentiment on, if they're saying there's no competition or everybody wants this, or so I think unrealistic projections, unrealistic statements on the market size, the attainable market size, and this might be another a red flag more for getting into an incubator or an accelerator, but we are always encouraging them to be coachable and eager to learn, because if you come in like you know everything, I can tell you right now that investor or that incubator or accelerator is going to see you as uncoachable, and they know that whatever they are going to try to achieve with you may fall on deaf ears. So those are some of the red flags we try to navigate our folks away from. So on the flip side, realistic projections, realistic descriptions of your market size that demonstrates that you've done your research and your homework, and showing traction, making sure that you like Barbara saying, you may not have the answer to everything. There may be questions on your IP, and do you have that patent in place? And you don't, but at least demonstrate the traction, at least say, we are in discussions with our IP attorney. We are doing the market landscape right now. We have done prior art searches, and show the traction. Your answer should not be no, but you can still communicate that you're still work in progress on that particular issue, so that you're at least demonstrating that you're being thorough, that you've thought about it, that it doesn't, it's not just some area that you've accidentally forgotten about. So those would be some of the things that we would try to
And
avoid.
the follow-up on the things that you say you're going to do. That is another subject to look into. If you say you're going to look for the IP guy, and next week you get together and they say, no, I didn't do it. Okay, but you told me you were going to do it, and it keeps on repeating. At the third time, I say, this is uncoachable, uninvestable.
Right, awesome. So Amit, thank you for the question. Barbara, Tracy, I appreciate the
Yeah.
responses. We have 3 other founders who would like to ask questions. Romario, would you like to unmute? Romario?
Yes, I'm here. Thank you.
Okay.
Sorry, can I go on video right now? I'm actually a dermatologist.
That's okay.
I'm actually in the practice. But I have 2 questions. One specifically want to ask for Sandra Glasgow of RevUp, because it seems like you have a incubator accelerator program there. Currently, I have bootstrapped my AI dermatology app right now that's currently onboarded and operational on Android and Apple, generating revenue. But I want to scale now, and I'm looking for expertise like a CFO, COO. Are these expertise some things that your facility and organization provide to founders like us? So that's part 1 of my question. And then part 2 is in terms of raising funding to organize pitch events, pitch dinners. Are there any streamline opportunities that founders like me can get in front of the funders like yourselves who are on this call to make presentations of what we have, and how can we get that done?
Okay. So thank you for that excellent opportunity to plug our incubator program. We have a new cohort starting on March 9, and we're accepting applications right now. You sound like somebody we would love to have in our program. Yes, we do. So we have a whole cadre of mentors and presenters and our angel investors. We try to help founders solve whatever problems they have, right? We have a great network. We have people who are in the HR space who can help find co-founders, find team members. So on that front, yes. We do have regular opportunities. First Angels and RevUp work very closely together. So we have at least 4 dinner pitch events each year. We do a lot of coaching with the founders. Apart from their participation in the incubator, they are specially coached to make their pitches. We have a weekend retreat at which we have an opportunity to meet with founders who have succeeded. And so, yeah, there are several touch points where you can meet with investors and make pitches. I hope that answers your question.
Yes, it definitely does, and gives me events and locations to look forward to, like actionable
Yeah.
points, which is
So
what we're
am
definitely
I
looking
to look
for.
out for your application?
110%. I'll be there.
Great.
Wonderful.
Okay.
Thank you, Romario,
Thank
and
you.
thank you, Sandro. All right. We still have like 3 questions left, but I understand that it's late. So if anyone needs to drop off, again, no worries. We're not gonna take that personally, okay? So but I would love to go through the questions and allow everyone an opportunity. Jared, rapid fire, buddy. Unmute.
Hey, good night, Kyrol. Happy to see you. So, good night, everyone. Thank you for sharing everything thus far. I want to specifically ask about impact investing and architecture investing, which is a bit different from how fast do we get to market, as opposed to when, especially when we're building things that benefit society and where we have to put resources into building. How does that look different from our general consumer type investing where we're driving towards users and install base as quickly as possible? It's a different paradigm. And how does that look from the investor side of the table for those organizations that have an appetite for architecture and impact investing? That's the question.
Thank you, Jared. I'll open the floor to any one of our panelists.
I have to admit I don't know what architecture investing is. I understand impact investing. I'm not familiar with the term, so I can talk about impact investing and where we sit with it.
Can I share quickly so you would have the context?
Yes, absolutely.
Okay, so let's say that I want to do, and it's literally what I want to do. I want to set up sovereign computing servers in Uruguay to support legal tech and fiduciary applications that require privacy and privilege as a service.
Okay.
Who buys the servers in that general sense? And that would be what I would, or some people would consider architecture investing as opposed to a SaaS or app or something to that effect. Actual physical hardware or infrastructure or architecture that supports a particular mission.
Okay. I think I have a sense of it. Look, I'll comment on the impact investing and where we stand with it, both in terms of the my UK fund and my Caribbean fund. We both funds value impact investing and make it a core part of what we do. We don't tie ourselves to any specific metrics, because we as a fund we want to have the opportunity to seek the best investments for investors. But fundamentally, as a business, as an entity, our ethos is about creating impact and delivering impact through the investments we make, and that reflects itself in the types of companies we want to invest into, which means that most of the companies that we will be investing into, will be able to, and I have to be careful not to say they have to, but will be able to demonstrate that they generate impact on some level. Obviously, the ESG is one framework. The SDCs as another framework as well, but that's kind of caught us in the UK, and I'm not sure everybody's familiar with this, but there's a the B Corp movement, that if you join the B Corp movement, you're basically declaring yourself as a company, a corporation that supports uh, a equitable distribution of benefits across all stakeholders that you're impacting, be it your staff, your shareholders, your founders, and it requires you to incorporate certain frameworks to show that you're going to be operating a fair and profitable business across all facets. So impact is a key thing for us from that perspective. I think Barbara probably said it as well earlier in the call, which is we are actually now starting to see that being driven even from higher up through the LPs as well. Everyone is recognizing that there's a commercial benefit in this as well. So you have that driver coming from the LPs and their LPs, if you like, which is, if you think about where all the money comes from, it probably comes from pensions to investment institutions to fund of funds to VC funds to founders, and you've seen that sort of ethos being kind of inching its way up that chain.
So from our perspective, we think of impact from gender equity. So in our fund, at least 50% of the people who are working with are women versus just men. And obviously, I work with Sandra, as some of you might know. So we look at it that way. We also look at the climate impact, and since we focus on SMEs, we look very strongly at job creation. And our fund started initially with all those impact metrics as something we measure. We don't have a critical mass of deals yet to be able to go out and report that we have this, but it's ingrained in our deals that we're looking for high quality founders that are diverse as much as possible.
Thank you for
Thank
that,
you, guys.
Ugo.
Golden insight. Golden insight. Thank you
Right.
so much.
Sandra, I just saw your message. Totally understand. No problem. So thank
Yes.
you again for being with us tonight. And Tracy left early on, so thank you to Tracy as well. We do have two last questions. So Jeff and Ugo, if you're available to stay on and take the questions, we can take the last two. If not, we can wrap up.
I'm okay for
I've
now.
got to go, but if there's a question, just hook me up on LinkedIn and I will answer it.
Yeah.
Thank
Thanks
you.
again so
Me
much,
too.
Bye,
Sandra.
Nice to meet you,
Sorry, I have
Sandra.
to go, but let me know if you need anything. I will write my email down here if anyone has any question.
Yeah.
Thank you
so
very
much,
much.
Nice to meet you,
Barbara.
Barbara.
Thank you. Really appreciate your
Okay.
time
And
tonight. Thank
Jeffrey,
you.
remember to send me that
I've
report.
connected with you on LinkedIn. Yeah.
Yes. Thank
Yeah,
you.
connect with
Bye-bye.
me, Jeffrey, as well. I'm gonna
Yeah.
stay till the fat man sings.
All right. Well, we only have two last questions, so we'll take them in rapid fire. John and then Anissa. So, John, would you like to unmute?
Sure. Just as far as just meeting in person, are there any particular events that are coming up over this next year that we should come out and just dare to be there in person?
Where are you based, John?
Sorry.
Where are you based? I didn't hear. Sorry.
Sorry, so I'm originally from Trinidad and Tobago, and I'm looking at projects in the construction industry, supply chain, etc., in Guyana, Trinidad, and Jamaica. So right now we're just setting up some manufacturing facilities, and we're still picking which one of those three is best to start with. But again, we're looking for the investment into the region. Currently, I'm based out of Canada. So I would love to have any excuse to get the hell out of here because it's a snowstorm outside right now and it's going down to minus 18 Celsius. So please, any point in time, where can we meet?
Well, John, all of FI Caribbean's events are virtual because we operate at a regional level, so it's really difficult for us to host island-specific events. That said, in particular, I'm based in Trinidad, so if you're ever in Trinidad, would be happy to meet up for a coffee. Reach out to me offline as well. Share a little bit more in terms of those verticals that you're interested in, and let me see how I can connect you with the network. Sandra, I know, hosts a lot of in-person events in Jamaica, though. And I know like 10 Habitat in Barbados is really active on the island. So connect with me offline and I'll tap into the network and see which in-person events are on the calendar for the balance of the year. But happy to help out. All right. Anissa, would you like to unmute? And we're gonna close off with you, Anissa.
Sure, Rawle. Thank you so much. This has been a really fantastic session. I am asking the question primarily from having been more in the nonprofit sector, where there's a lot of development in terms of building entrepreneurial capability and micro enterprise development and that sort of thing. But it seems like within the Caribbean context, the focus on the founder conversation, the investor type conversation, it's not happening in the same places. So I have heard, various perspectives from around the globe, and it would just be nice I know it's very late. If we could just get a sense of, is that something that is noticeable, or is that something that has already been overcome, for persons who are even within the nonprofit space and working avidly to build entrepreneurial capability?
I open it up to the panelists. If anyone would like to touch on that. Barbara, I see you're back. Jeff, Ugo?
I'm just trying to make sure I understand the question, really. Maybe you could just
So
rephrase it for me.
paraphrasing, Anissa, you're looking at what's trending in terms of investments for NGOs in particular.
Not NGOs per se, but there's a focus on building entrepreneurs, like that part of the conversation, but not necessarily on understanding your role as a founder and that there are opportunities for funding and investment. So the way that we experience it within the nonprofit sector that's working on building entrepreneurial capability, it's like there are two independent tracks of development that's taking place.
Right.
So that's
Okay.
what I'm trying to understand.
Right. So
Maybe, Rawle,
I
I
can
don't know if you could paraphrase it to make it a little bit clearer what the
right.
confusion
So
is.
well, okay. So yeah, what I'm understanding is that on one side you're looking at entrepreneurship support organizations who are developing the startup ecosystem and their needs as it relates to supporting the founders. And then on the other side, you're looking at, okay, the actual founders who are growing these startups, what their needs are, and what they need to support to support their startup journey. So as you said, Anissa, it's two different tracks. So as it relates to, for example, Founder Institute Caribbean, Sandra and I were chatting about earlier on that we're both heading to Barbados next week for the Connector Caribbean launch. Connector Caribbean is being facilitated by Bridge for Billions. It's funded through the IDB Labs Carib Equity Facility. And their role is to support the entrepreneurship support organizations. So their role is to support the incubators and the accelerators and the ecosystem players who are working with founders, which is very different and separate from investment or grant opportunities directed towards founders themselves. So is it that you're looking for clarity in terms of where you can access those different resources?
Yes.
Okay, so not to take up too much time here, reach out to me offline and I'll be happy to share the resources as they relate to Connector Caribbean and as they relate to incubators and accelerators operating in the region. So that way you can get support both for ESOs and for the founders.
Perfect. Thank you
Yeah.
very much, Rawle. Appreciate the
Anissa,
appreciate the clarity.
if you
Barbara,
want, you can
sorry.
write me and I can help you because we try to do both things. As we say, we always try to be the one that opens the door, but the founder has to be the one that crosses the portal. So if we can help you out with the information, we will do that.
Thank you. Appreciate it.
Wonderful. Okay. Adana, are there any more questions? Or I think that was the last.
Yeah, so it looks like we're in the clear for now. I'm not seeing anything.
So I'd like Jeff, Ugo, and Barbara just final closing thoughts, like rapid fire, 30 seconds each, just to close off the evening. Barbara, since you're on the go, maybe you want to go first.
I'm in the middle of the street. No, for me, it was a pleasure to be able to understand and to be aligned with other people that are trying to create the ecosystem that it's really needed. Always try to be patient. We will try to go like faster than we actually can, and actually what the ecosystem can. But what I would recommend to the Caribbean is to work cross-border, to work together. And you have all the information you need from people that already did it close to you. In Latin America, 15 years ago, we didn't even have anyone to ask. So ask us, get together with other people that been there before. As Jeffrey and Hugo, they've been crossing oceans and working in other places. So you have a lot of potential. And I think what we've been needing as a region is to go from the intention to the action, to go and do it. So that it would be my idea, is like in 5 years we get together and everyone has amazing experiences to share.
We don't want to wait so long, Barbara. We need to make it happen this year.
Yeah.
But thank you so much, Barbara. I appreciate that, and I hope you arrive safely to wherever you're walking to. So thank you again, Barbara. Jeff, closing remarks?
Yeah, so I guess my closing remarks is that look, Barbara touched on it. I've seen investments from different parts of the world. I've invested in across different continents. Talent is equally distributed, and opportunity isn't. If you think of it like that, the founders in the Caribbean, you guys are no less intelligent, no less skillful than any founders in any part of the world. The challenge that you guys face is access to capital and access to support. And that's one of the things that we here at Caribbean Ventures is trying to solve and trying to bring to you. But I think you should go away thinking that, I feel that there tends to be some sort of, I wouldn't say inferiority complex, but it's this sort of, we in the Caribbean don't have. But you guys are as smart and as capable as anybody else I've seen. And you should know that and go forward with that strength.
I love that, Jeff. Thank you so much. Hugo, closing thoughts.
Closing thoughts. I wanted to sort of actually echo what he just said, what Jeffrey said in terms of the lack of liquidity in the market. I think that all Caribbean founders should just start thinking outside the box. In other words, and also think with urgency, because one of the things I was told, that a lot of businesses run for 10 years on family money, like friends and family. They don't get the kind of capital that can boost them so that they can scale across borders. So even with the fund, what we're doing is to think outside the box. When we set up the fund initially, we only got 2 Caribbean investors to support us for fairly small sizes, right? Most of the funding we have is from external international investors who were friends of ours, who we could talk to. And then we realized that we're going to have to do something different to bring capital into the Caribbean. And I can't really divulge what we're doing, but we're going to have to do something super out of the box thinking to bring, as much money as possible into the Caribbean and find those founders that we can either create M&As with. So we set up an office in Silicon Valley. We set up an office in Europe. And what we've decided is that, just like what Jeffrey said, is great founders are everywhere. They're not only in Silicon Valley or in Europe. So if we can find those very talented, skilled people who are undiscovered in the Caribbean, partner them with somebody who's skilled also in Silicon Valley or in somewhere in Switzerland, we then start to create the possibility for funding not only to come from people investing in the Caribbean, but there are also people who want to invest more globally. So I just think we have to think outside the box. We have to pivot. But I do believe that it's sort of one of the last undiscovered frontiers of the world when it comes to venture capital. And we think that the potential is massive. So founders should think the same.
Awesome. Thank you, Hugo. And on that note, everyone, we're signing off for the evening, but I just want to thank all the panelists again. And Barbara, Sandra, Tracy, Jeff, Hugo, thank you all for serving on the panel this evening. And of course, to the FI team, Nikki and Adana, and to all of you this evening, feel free to reach out to me on LinkedIn. Feel free to reach out to the panelists on LinkedIn. We're here to help. We're here to support. I'm a founder myself, and I know that the journey is difficult. So we need to build our own tribe in the region, and together we can, like a rising tide, we lift all boats. So have a wonderful evening, everyone, and see you again next month for our next session.
All
Good
right.
Thank
night.
you, guys.
Bye.
Have a
Good
good
night.
night.
Evening.
Bye-bye. Good night.
Thank you. Fantastic session.
Excellent.
Thank
Excellent.
you.